$3.7 billion for a glass company. Apollo is out here throwing stones in glass houses.
Terrible joke. Also, it's architectural glass. But look at the data. Q1 deal volume is actually down 22%.
Who cares about volume when the checks are this massive? $813 billion total. The Megadeal is officially back.
I care. It means only the whales are eating right now. Let's look at why Apollo is suddenly obsessed with Japan. The rundown.
$813 billion?
I saw the chart.
That is a 50% jump from last year. Q1 is officially the quarter of the Megadeal. The bankers are finally sleeping on their silk sheets again. Rates stabilized, everyone is scrambling to buy AI infrastructure, and the checks are massive.
Hold on, you are ignoring the actual transaction volume. Deal volume is down 22%.
Because they are writing bigger checks. It is a highly convicted market.
No, it is a top-heavy market. A few massive corporate consolidations are masking a totally frozen middle market. Do not let the headline number fool you.
Well, the headline numbers are fun. Zijin Mining is dropping $2.6 billion into Chifeng Gold.
A massive strategic stake. Gold prices act weird. Mining companies consolidate.
You buy the shiny rock, classic. What else you got?
Gilead is acquiring Ouro Medicines. The press release quotes the deal between 1.68 and $2 billion.
That is a really wide spread.
Exactly. A $320 million gap is not a rounding error. I am pulling the regulatory filings tomorrow because I guarantee there are some extremely aggressive milestone payouts buried in the footnotes.
Earnouts are back. Put the clinical risk on the founders.
Always. Oh, and Olympus Partners just offloaded the retina business of EyeSouth to Cencora for $1.1 billion.
Niche healthcare roll-ups print money. But if you want a real wild card, I heard Blackstone is looking at taking a stake in the Global Cricket League.
You are kidding me.
Private equity loves live sports.
I genuinely want to see a bunch of New York buyout guys trying to model out what a wicket is worth.
The pitch deck is literally just the words billion viewers in India in 72-point font.
I absolutely believe that. Same energy as Perfect Corp hastily forming a special committee last week for a mysterious going private proposal.
Corporate theater at its finest. Just like Jacobs finally cleaning up their cap table by paying $1.6 billion for the rest of PA Consulting.
Right. But speaking of massive overseas deployments, we need to talk about what Apollo is doing in Japan.
Oh, absolutely. $3.7 billion for glass. The big one. $3.7 billion for a glass company. I have to admit, when I saw the ticker cross my screen, I did a double take.
It is not just a glass company, Nate. Nippon Sheet Glass is essentially the invisible infrastructure of the modern world. Architectural, automotive, you name it. But yes, Apollo writing a check that big for a legacy manufacturer is wild. It is their largest private equity play in Japan to date.
It makes perfect sense if you look at the macro picture. You have a weak yen, you have stabilized interest rates, and Apollo has absolute mountains of dry powder. They are looking at this cash-flowing, entrenched Japanese industrial asset and salivating. It is a classic banker yield play.
I do not buy that it is just a simple yield play. Look at the broader first quarter numbers. We hit $813 billion in total deal value. That is up 50% year over year. But here is the kicker. Transaction volume actually dropped 22%.
Right, the era of the Megadeal is back. The middle market is quiet, but the heavyweights are throwing haymakers.
Exactly. Fewer deals, but massive, massive checks. And everyone is trying to justify these valuations by tying them to AI infrastructure. I literally read an analyst note this morning trying to connect Nippon Sheet Glass to data center cooling architecture.
Oh, come on. Are they really trying to spin window panes as a generative AI play?
They are. They absolutely are. The desperation to put the letters A and I into a press release knows no bounds. But honestly, I think Apollo just got a massive discount. Nippon has been quietly restructuring for years. Apollo swoops in, takes it private, strips out the bureaucratic overhead, and flips it in 5 years.
See, I disagree on the flip timeline. I think Apollo holds this for a decade. The Japanese market is completely different from the US or Europe. You do not just strip and flip a legacy manufacturing giant in Tokyo. It is a relationship play. They want to show the government and the local banks that they are good stewards of corporate Japan.
3.7 billion is an extremely expensive PR campaign.
It is an expensive PR campaign that actually generates free cash flow. Do not underestimate how badly US private equity wants to unlock the Japanese market right now. It is the last great frontier for undervalued conglomerates.
Fair point, but I still want to see the debt structuring on this. You know, Apollo is not funding this entirely with cash. I am going to be digging through the Japanese regulatory filings all weekend just to find the actual leverage ratios.
You really know how to live it up. While you translate debt covenants, the rest of the market is just celebrating the return of the Megadeal.
Well, speaking of massive checks and complex structures, Apollo is not the only one spending billions this week. We need to talk about Gilead Sciences.
Oh yes, the Ouro Medicines deal. Between $1.68 and $2 billion, depending on who you ask.
And those mysterious milestone payouts are exactly why we need to look at the fine print. Voices.
So the consensus from the analyst desks this morning is that Q1 2026 is officially the quarter of the Megadeal. They are pointing to stabilized rates and this desperate scramble for AI infrastructure as the main catalysts.
I read those same notes, and I am pulling my hair out. They are completely burying the real story.
How? We just hit $813 billion in total deal value. That is up 50% year over year. The market is back.
The market is top-heavy, Nate. Look at the actual data. Transaction volume dropped 22%. The middle market is totally frozen. We do not have a healthy ecosystem right now. We just have a handful of heavyweights writing massive checks because they can swallow the debt.
You are looking at the empty half of the glass, which, speaking of glass, Apollo just dropped $3.7 billion on Nippon Sheet Glass, their biggest Japanese private equity investment to date.
Exactly my point. Is Apollo buying an architectural and automotive glass company because of the urgent need for AI infrastructure?
Hey, maybe the servers need really nice windows.
Oh, come on. No, Apollo saw an undervalued, capital-intensive asset overseas and pounced. The analyst narrative claiming everything is AI is just lazy.
Okay, fair. The AI excuse is definitely getting stretched, but you cannot tell me private equity is entirely rational right now. Rumor has it Blackstone is looking at taking a stake in the Global Cricket League.
Wait, really? Cricket?
Live sports, Maya. The ultimate undisruptible asset. If you cannot buy a software company, buy a cricket league.
That is actually smart. I hate how much sense that makes. It is definitely more grounded than whatever is happening at Perfect Corp. They just hastily formed a special committee over the weekend to evaluate a mystery going private proposal.
I love a mystery bidder. It is like corporate reality TV.
I just like reading the filings to find out who the mystery bidder actually is. Which reminds me, we need to dig into the regulatory paperwork tomorrow to see the exact payout structure and milestone terms on Gilead's buyout of Ouro Medicines. Spill the tea.
I'm telling you, Blackstone looking at the Global Cricket League is not a joke.
I just can't picture Steve Schwartzman sitting around watching a 5-day test match.
He doesn't have to watch it. He just has to look at the media rights. Live sports is the last moat in entertainment. Private equity has been circling European soccer for years, and cricket has 1 billion fans in India alone.
Sure, the scale is massive, but running a sports league is incredibly messy. You think a private equity risk committee is equipped to handle superstar athlete drama.
They handle superstar CEO egos every day. It's the exact same skill set. Just substitute a golden parachute for a transfer fee.
You're giving bankers way too much credit for emotional intelligence. Speaking of corporate drama, did you catch the sudden filing from Perfect Corp?
The beauty tech company, the ones doing the augmented reality makeup try-ons?
Exactly. They hastily put together a special committee last week to evaluate a mysterious, non-binding going private proposal.
Mysterious? They didn't name the buyer?
Total ghost. No name, no premium mentioned in the initial release. Just a sudden scramble to form an independent board committee.
Oh, that screams a management buyout. The founders probably think the public markets don't understand the vision.
See, I disagree. I read the footnotes on their data usage. I actually think this is a pure AI play. Perfect Corp has arguably the best facial mapping dataset in consumer tech. Millions of faces, perfectly mapped.
Wait, really? You think a major tech player is trying to quietly buy a makeup app just to harvest the AI training data?
Absolutely. I'd bet real money on it.
That's actually brilliant and terrifying, but it totally fits the narrative right now. Analysts are saying the desperate scramble for AI infrastructure is exactly what's driving this massive Q1 Megadeal surge.
Exactly. Deal volume is actually down 22% across the board, but total value just hit $813 billion.
People are writing massive checks, which brings us to Apollo dropping $3.7 billion on a Japanese glass manufacturer.
We need to look at exactly how Apollo structured that buyout right after this. Tomorrow's radar. I'm hitting refresh on the SEC portal at 6 a.m. tomorrow for the Gilead filings.
You really care about the Ouro Medicines milestones? It's a $2 billion deal, Max.
1.68 to 2 billion. And yes, the spread is entirely in the earnouts. I want to see exactly what clinical hoops Ouro has to jump through for that remaining payout.
Spoken like a true skeptic. I'm watching something way more entertaining. Blackstone is supposedly evaluating a stake in the Global Cricket League.
Oh, come on, cricket?
Don't disrespect the pitch. Live sports are the ultimate moat right now. Private equity can't get enough.
It's a shiny object. The real operational story tomorrow is regional banks. Ballston Spa and NBC Bancorp finally have to combine their tech stacks. That's where the bodies get buried.
I'll take shiny objects over bank integrations any day. Plus, Perfect Corp just formed a special committee for a mysterious going private offer. Who do you think the buyer is?
Probably someone looking at that $813 billion Q1 Megadeal surge and feeling left out.
We'll see who's writing the checks tomorrow.